This stock just went from $80 to over $220 in just a few months. So I'm going to walk you guys through the entire trade, shall we? The ticker is NBIS Group. They are an AI infrastructure and technology company that builds and operates full stack computing power, large scale GPU clusters, and cloud platforms for enterprise customers. Overall, super strong stock over the last year. It has come up multiple times on my stock screener, and I'll show you why. Don't need to pay too much attention to the details here. This is strictly for learning purposes, but it first caught my eye back in November. As you can see, super high volume around that time. Then as you can see, this whole stretch here, price was basically just chopping between around like 80 to 120 for months. This is kind of where most people would get bored, don't care, scroll past it. This is where I add them to my watch list. Watch how the range right here is actually starting to build higher lows. And a lot of the time where I do look for a coil where there's lower highs being formed as well, here actually the highs just keep getting higher. Overall, great sign of strength and that a potential explosive move could be happening. And then over those months, you can see that volume stays relatively average until around this day where price starts to kind of get explosive again. It tries to break out of the range, but then gets pushed back down. Almost a buy for me, but not quite. I'm waiting for it to break resistance, break out of this range on confirmed volume. So then it finally does right here. I buy in, and just like I told you guys yesterday, I don't set my stop right at resistance. I kind of look at these as little zones. So I did put my stop at the low of the previous day because if it does go back into this range, then my trade idea is no longer valid. And once it closes up here, I usually move my stop to break even and my resistance becomes my support floor here. So a mistake that I see some people making is they'll put their stop at the bottom of the range, but that is a really wide stop to have. You are going to end up risking way too much or barely being able to position in at all to actually make a return on it. Sure, while you could hold while it stays in this chop zone, it will probably end up being a waste of time. It will lock up your money and it's not necessary because if it's in this zone, it's not really a trade. If I'm buying in at 125, you also want to take into account the average daily range, which for NBIS over like the last 2 weeks has been around 8%. That means on a normal day, it could go down to 115 pretty easily. So you want to factor this in as well when setting your stop. So give it breathing room, but also make sure that you're not just holding past the invalidation point. Then a way to actually hold a winner and really let it ride is to utilize the 10 EMA. So instead of just selling here like at 140 or at 160, kind of let the price break out and then it hugs towards that 10 EMA, which is the blue line right here. So could take profits right there, breaks out again a little bit, comes back towards the 10 EMA, can take profits right there, and then just continue up. And once the 10 cleanly crosses under the 20, which is the yellow line, then you can look to sell the full position. This is really how you can optimize risk reward. Don't be mistaken that just because a stock has exploded doesn't mean it can't go higher. A lot of the time they can.